Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Friday, February the 7th, the year 2020. Let's talk trading. Time for the weekly wrap up, and it's NFP day. Now, somebody put out a little blog or video talking about not trading NFP day. Stand aside. Ooh, it's scary. There was a time when I wish NFP day was every day because of the volatility. I like the fast action. I like to see 100 pip moves in a few minutes. I loved it. But most people think it's scary. Now there are certain things, certain places where you probably shouldn't trade on NFP day. If you have a broker that makes the spreads arbitrarily wide, so it's basically impossible to take profit, then yeah, stand aside. In fact, get a new broker. I mean, it's just ridiculous what some of those brokers out there do. But beyond that, if you've got a broker that's giving you, decent spreads, by all means, use what you know. It's no different on NFP day. It just might happen a little bit quicker. Now, the one thing you definitely need to know is where your stop loss is on any given trade, because you don't want to lose any more on a trade, whether it's NFP day or not, than you're willing to lose on a trade. It's just that simple. Now, boys and girls, fellow traders, I want you to keep in mind that these videos are for educational purposes only, and your results may differ from mine, and that trading's very risky, and it's just as risky any other day as it is on NFP day. The risk is still there that you can lose all of your money. So, if you're seeking trading advice, investment advice, financial advice, seek it from an accredited financial professional. That way, if you lose all of your money or some of your money by taking their advice, you know the advice came from an accredited financial professional rather than somebody with the funny name posting on YouTube or posting on trading forums or sending emails, or you hear about it, overhear somebody talking about it, etc. Okay, disclaimers out of the way. For the week, we still have some gaps that haven't filled, and we probably realized by about Wednesday or Thursday that these gaps weren't going to fill, but hey, anything can happen, right? As far as dollar yen, 141 pips off of the weekly low, 30 pips off of the high today, because we did make that high today, I do believe. And that's pretty much where the dollar yen stands. On the daily, you can see we're 99 pips above the open. And yes, you can see here it made a new high and only reversed off of it. To be expected, right? We got this big green candle here, expecting price maybe to come back to this area. And you can see here on the weekly, nowhere near the weekly open. For the month, we have 171 pip range, average range 292. Now, this is something very interesting, boys and girls. Yesterday, we were in the inside bar that occurred yesterday it was 11 days ago, but today it's 12 days ago. Price opened in the inside bar area. So we had a short trigger at 82. You can see we are 10 pips below there, but we had obviously another 19 pips we could have collected. So somewhere around 25 or more pips, 25 to 29 pips was available right there on that breakout. On the other hand, we got in the inside bar of the week 7 weeks ago, and you can see here we went in, but we popped out, and right now we're 4 pips above it. So simple horizontal line trade still working on NFP day. You can see here we've got an outside bar across yesterday's high or above yesterday's high and below yesterday's low. We're now above yesterday's low by 3 pips. You can see here a very strange NFP day. We only have 3 pairs over 100 pips, with the yen clocking in at only 79. I mean, it's like, what happened? Where's all the price action on NFP day? You can see here during that NFP, we went above the monthly H1 highest open, and the daily H1 highest open crossed below. Lots of pips to be had there. Lots of pips. We put in a daily low, H1 low right here, daily H1 low, and price made a new low, reversed up through it, and you can see that was good for about 20 or so pips there too. A nice move. Once again, these big green candles, look for price to return to those areas. We took out that missed pivot. We took out the daily pivot for today. You can see here the rats, enough range, and the green rats feasted, and the red rats feasted back to the green rats. Really not, still only what, 9 pips between the two zones, but there's still money to be made. But remember, boys and girls, educational purposes only. Your results may differ from mine. Notice we crossed above the weekly R3 at the pivot level and came back down. Once again, a nice horizontal line cross there. The pivots, we took out yesterday's missed pivot. We still have a missed pivot here from the 5th for this year. And remember, I analyze the dollar yen, and if you want me to do another pair, feel free to ask. I'll work it in, but I just like to show you how to do it. You can stick with one pair and make money consistently. And once again, on price action, price has the range. It opened between the 90 and the 00, did not stay within this area, and as you can see, moved out. Once again, it stopped here between 60 and 50. It's probably not going to stay there either, and as you see, it didn't. Simple trades using horizontal lines, nothing fancy. Wick zone, once again, you see here, we entered that upper wick zone, came out to the downside, didn't make a new high, so obviously let's go short, and you see what happened next. And you say, it's not a hairy hindsight trade because we do this every day, so we know what we're going to do because we see it on the chart. Once again, crossing horizontal lines from the previous day right here. Simple trades. I left the Einstein line on from yesterday, and you can see right here, once again, we got in that Einstein line area and taking a short here. You can see what happened next. As far as the tick chart, we've got a little more motion than usual based on NFP, but things have settled down. It's already 2 o'clock on the East Coast. They're probably wrapping it up to go where they go on the weekends. But you can see here on the weekly, we were in that upper ATR zone, and we're still there. And if I scrunch the chart in here, that's too much scrunching. You can see here Monday, Tuesday, Wednesday, Thursday, Friday. We're still in that upper ATR zone for the week. Range today 49, range for the week 171, with the average range of 124 for the week, so we exceeded it. We're right at the average range on the daily at 49. Okay, daily higher high, lower low, weekly higher high, lower low. So we've got outside bars on the daily and the weekly here on the yen. Now on the monthly, we got a lower high and a higher low. So that means one thing. We've got an inside bar so far on the month, but there's still plenty of month left in February, 3 more trading weeks. So we'll see how that plays out. Once again, looking here at the highs and lows that have not been taken out, or crisscrossed, however you want to say it. You can see here, it's kind of hard to see what those prices are. 182 at the high, 52 at the low. Price is going to have to leave that area. It's not going to stay there. Maybe for the rest of the day it will, but probably sometime next week it will either go above 82 or below 52. That's only 30 pips. It might take it a day or two, but chances are it won't remain in that area. So, boys and girls, there's nothing to fear on any news day, NFP day, ADP day, there's FOMC day. There's nothing to fear. You know where your stops need to be. You know these horizontal line triggers. It's you don't have to make it any more complicated than it is. It's very simple. In fact, I saw something where, if there's more than one thing involved, are you complicating it unnecessarily? And as you can see here, all of the different methods that I employ, you could have seen profit today trading them. You can almost see profit every day, but these videos are for educational purposes only, and your results may differ from mine. You might live in a different time zone and not get have the same price movement as I do when I'm trading. But the fact of the matter is, it's not hard. In fact, I even stumbled across somebody, I think they have something called Wicks Don't Lie. And I guess they put it out a couple years ago. I don't know if they've ever seen my stuff before or not. I think the first wick zone indicator I wrote was somewhere in the late 2000s, like 2008 or something. And then I did the wick zones indicator. I remember I did that one in 2014. But I think there was some that maybe it was 2010 when I first did some of those. I'd have to look it up. But point being is that, there's other people doing the same thing and it's working. The only problem is I saw that they started talking about support and resistance and squiggly lines, but, each to their own. If it works for them, I'm happy. Happy to see another trader find something that works and profit from it. So, fellow traders, I hope you had a good trading week, and on each and every trade you had your stop losses in place. And I hope you have a safe weekend. And I believe, is it next weekend we've got Daytona 500? Back to NASCAR. So, fellow traders, keep in mind, whenever you're at your trading platform, it's not what you trade, it's how you trade it. So go out there and drain the banks. And remember, if you're new to my videos, come down here somewhere, click on the subscribe button, click like, click the bell so you're notified when I put out another video, which is usually Sunday through Friday. I usually take Saturday off from trading videos. And so, but if you're in Europe, you get 2 on the Monday because the market's open here on Sunday. So, and then of course, copy and paste the link to this video and post it all over the internet so more people know about me, right? Okay, fellow traders, that's it. TheRumpledOne signing off.